starting from the benchmark index moves to sectoral action and all the stocks that are moving in trade today. We'll also get you expert views as to where should you be looking for opportunities in the current market setup. First up, a quick check as to how the benchmark indices are moving as we inch closer to the day's end of the day. Well, we're looking at some bump up in the markets, about a 0.25% jump for both the Nifty and the Sensex right now. They're inching towards the higher point of the day, 18,611 currently for the Nifty. It's up by about 50 odd points, 150 points of a jump for the Sensex as well, 62,771 the current levels. Let's look at the broader markets that have been doing better right from the word go today. And now we are seeing a further, inching of small caps to the high point, about 0.8% of an uptick for this one, half odd percent of a move on the mid cap 100 index as well. So the broader markets doing better than the benchmarks as we speak. In terms of the other sectors, in terms of the sectoral indices per se, the Nifty Bank was sulking from the whole day, and we are still seeing the Nifty Bank down in the red. Of course, there's some pullback from the day's low point, and that's perhaps on the back of the PSU banks that are continuously, moving higher today. About 0.5% of an uptick can be seen for this one. Private banks still sulking, about 0.08% of a fall for this one. Financial services were absolutely muted, and that remains so the case. But IT index is on the back of which the markets are actually inching higher, 1.7% of a very strong move coming in for this index at 28,833 currently. So that's the index that's leading the show. Of course, apart from this, it's the realty stocks that have been doing well. Right from morning trade, we've been seeing the metals participating as well. Slight gains, very, very slight gains coming in as far as the Nifty Next 50 and Next 100 indices are also concerned right here. The FMCG stocks are also inching up higher as we speak. But in terms of the stocks as well, as far as the Nifty gainers are concerned, you do have a whole host of stocks coming in and participating from the IT pack again. It's stocks like HCL Technologies, Infosys, also BPCL now as the top gainer at 2.8% uptick. NTPC is inching higher. SPI Life coming back in flavor. Adani Enterprises also up by 1.4%. But most of it are from the IT pack clearly. On the downside, you do have some consumption-oriented names like Titan, about 1% lower in trade today. You're also seeing some stocks like Cipla, Power Grid, down by about 1.5% in trade. And also stocks like Maruti Suzuki, L&T and HDFC Bank. Some of those heavyweights also not really participating in this recovery that you're seeing in the markets today. But time to welcome our guest on the show. Krishna Kumar Karwa joins in. He's the MD at Emkay Global Financial Services. Welcome, Mr. Karwa. Great to have you with us on Business Today TV. Well, first up, I wanted to understand your own sense of how are you looking at the market setup. We've seen roaring comeback of the FIIs, the liquidity that has really led these several indices to record levels as well. Barring the benchmarks, we've seen a whole host of sectors participating in this rally. Your own sense of the markets, where are we at and where do we go from here?
Good afternoon and thank you for inviting me to your show. Yeah, rightly, as you said, Sakshi, that the markets have seen very good bounce up from almost like for the last 2.5 months. I think 2-3 factors which have worked in the favor of the market. One is obviously the pause as far as the interest rate hikes are concerned, which is as far as the domestics are concerned. So the expectations that inflation should stabilize.
Yeah.
And as far as even global is concerned, I think there is a sense that maybe we are at the peak of the interest rate hike cycle over there also.
Yeah.
And on the back of plus, if you see before March, the Jan-Feb March, you had seen a lot of money flowing into the Chinese market, and we also saw similarly a lot of outflows from the Indian markets as far as emerging markets are concerned. I think that trade has kind of flopped in terms of the last few months. We have seen that the Chinese markets have not done very well, and we have seen the benefit of that in terms of our domestic fundamentals have been robust, and we have seen very good inflows from the FPI. I think in the last 2 months, almost like 60 to 65,000 crores of inflows have happened. And where the domestic investors have been very rational in their behavior. So when FPI selling was at its peak, I think in the domestic investors continued to invest in the domestic mutual funds and directly and indirectly to the domestic market. But in the last 2 months, if we see the domestic investors, if you see the flows have been muted as far as the MF inflows are concerned. But the markets are behaving very rationally. Then economic number, I mean, the financial numbers which came for the full year, they have been also on an uptick I mean, stable numbers that we have seen. So, whatever the negativities were there as of March end and the valuations which were impacted, I think we
Yeah.
have seen a decent bounce up. But going forward, I think most of the rally seems to have been done with. The breadth of the market has been very, very robust. I cannot complain with the macros. The macros continue to be robust as far as India is concerned in terms of inflation, in terms of input prices for most companies coming off, and in terms of demand also expected to be robust. Only concern if you have today is that the valuations seem to have run up, and specifically in the small mid cap segment where we have seen a very good rally in the last few months. So I would say that investors need to be very, very careful in terms of the new exposures that they want to do to the markets in terms of looking at the bottoms of valuations. I think that is the only concern as of now I would have in terms of investing. Otherwise, macros seem to be all very stable. So maybe we could see some sideways correction. And if you look at Nifty itself, I think almost 80-90% of the stocks are quoting at about 200-day moving average. So which
Yeah.
gives you kind of a signal that maybe a temporary pause could be on. So I think it's all technically or on a short-term basis, we could see some consolidation.
Okay.
The term looks decent. I think as far as broad markets are concerned, investors should be very much bottoms up focused rather than trying to invest or avoid or based on global macros.
Right. Mr. Karwa, like you also pointed out that, we've seen robust comeback of FPIs, the way they have invested in the Indian equities. Do you really see this is just the beginning of, say, a multi-year turn when it comes to global allocation of money in India?
It's very difficult to say. I think, see, our domestic fundamentals, if they continue to remain robust, and but valuations also have to be supportive. See,
Yeah.
I think if the valuations are, if they go overboard for whatever reasons, then I don't think so that we can expect global flows to continue. And also, global flows is also a function of opportunities which investors have in developed and other emerging markets. But having said that, on a domestic fundamentals itself, I think they are very robust, and if they continue to be robust, then I'm sure investors would find opportunities to invest in various pockets of the market. It could happen that you may find some sectors getting overvalued and some sectors presenting opportunities. And at the end of the day, almost 35 to 40% of the weightage that Nifty has is into financial, and that is a segment which continues to show robust growth and robust fundamentals. And that's where you would possibly see FPIs continue to invest. They love that sector, and there is a whole breadth of stocks available over there across market caps. So FPIs will tend to gravitate to India because of the robust domestic fundamentals, the opportunity, the whole variety of stocks which are available. So amongst emerging markets, probably we are the only market where the variety of sectors available for FPIs to invest in is the huge breadth is there, which is possibly not available in other markets. So yes, we expect robust inflows into the markets, but then you would have some cyclicality based on various factors.
Right. Like we also were discussing that the markets optically are at this lifetime high level as well. But, in this run up, what we've also noticed is that a wide or gamut of or a large gamut of heavyweights have actually not really participated here. What could be the reason for that? And do we see now participation increasing in those, heavyweights now?
Yeah, as far as some of the heavyweights, if you're referring to the banking sector, where there is maybe not great participation in some of the banks despite the robust numbers, I think there is a question of over ownership. I think the domestic institutional investors have invested to the maximum capacity that they can invest in. So additional whatever inflows come to that extent that they can invest in some of the banks which they already own. So that is one challenge that some of the leading banks are facing as far as investor interest is concerned. Similarly, if you look at the IT companies, yes, they have had a poor last 1 year
Yeah.
because of the headwinds that they are expected to face in their core markets in the US in the next 12 to 18 months. So the valuations have come up, but they have stabilized, I would say. And managements over there are very conservative. And I think let the numbers flow in quarter one, quarter two for investors to take a call going forward. So these are the two large cohorts where possibly you see valuation. I mean, where you see that they have been stagnant in terms of valuation in the last few months rather than participating along with the broad market. Apart from that, if you see, I think as far as consumers are concerned, where we have seen a decent uptake in the expectations that the input prices, etc., have all stabilized, and that should aid in improving margins for the companies and also improve demand as they rationalize the price hikes that they took earlier. So I would imagine even if you see autos again, we have seen a robust demand environment, and they have also many of the auto companies have participated. But if you ask the two large segments which have kind of not moved up in participation, the banking, financial, and IT companies, I think I just shared with you the reasons for that.
Yeah, but is this the time? Is the time right now to take contra bets on IT space? We've been seeing some upticks of late. Is this the time to invest in some of the top-notch IT firms?
Definitely, I think it's a very robust sector with very good fundamentals as far as the profitability of the sector is concerned and the conversion of the profits into cash is concerned. So valuations have also come off. Only thing is that in terms of growth, what will be the time frame in which the uptick will happen? That is somebody which is very difficult to fathom. So if you have a longer term time frame in terms of investing horizon, which could be maybe a few more than 24 months, then this is the time to start investing in the sector leaders, both in the large cap and the mid cap segment. And you should have scope to average out or be patient enough if you don't find the growth in the sector as per expectation, maybe for a few more quarters. So to that extent, it's all about time horizon. Otherwise, there's no reason not to invest in the sector.
Okay, since we're talking technology, I wanted to take your view on the buzzword AI, the artificial intelligence, and how it's actually taking over all aspects pretty soon than but what we had imagined it to do. Now that we've seen what's happening with Nvidia globally, and what usually happens in the US translates into a trend that happens into India as well. Do you think for an average Indian, it is the right time to start looking at opportunities in this space for this multi-trillion dollar industry that is going to emerge over the next decade or so?
Yeah, I think definitely we should be looking at opportunities, and I would imagine that our domestic IT companies themselves would build a lot upon it in terms of the various applications which will be required on the base AI platforms. So the opportunities will come. It's early days also. And apart from that, any direct opportunities to invest in the Indian environment based on AI, it's early days as such.
Okay.
Globally, yes, some of the stocks have run up, Nvidia, as you mentioned, but is there a hype? Maybe, maybe. So I have seen so many of these fads. I'm not saying that AI is going away, but
Okay.
it's best to be steady and understand the implications, and then when the hype is come off, then to invest in such opportunities rather than getting into the hype currently. That would be my conservative way of looking at it.
Okay. Apart from, we've discussed banks, IT, you've talked about the auto space as well, and now AI. But what about the realty pack? Is there anything interesting that you're looking at this space as well? We've been seeing some of the stocks touching 52-week highs. The kind of data that was coming in over a few months ago with the kind of pre-sales numbers of the luxury, properties that most of our Indian names have actually seen are pretty robust. Does it really, mean that we've seen pretty much the end of 7-8 year of a downturn in the realty pack, and perhaps we could be at the beginning of an uptrend now, and this is the best way how one can really take a pie of the realty upsurge now?
Yeah, I think there has been an uptick in the realty stocks in the last 2-3 years. I think only question was that if you look at 2022, there was kind of a consolidation. And now again, there has been an uptick. The numbers have been good. Even during COVID, we had seen very good sales, and post that also. So what has happened is that there was a huge amount of pent-up demand which has got fulfilled. And but the numbers that now what we are seeing is not any pent-up demand. It is very robust demand across geographies shown in terms of pre-sales by many companies, which is a very, very pleasant surprise. So I think maybe the whole reality space itself is in an uptick. It was in doldrums till 2, 3 years ago for almost 7, 8 years. So we are in the midst of a good run as far as the reality sector is concerned, and some of the companies which are leading participants in that. This sector is basically, if you look at the companies, most of them are kind of regional leaders, with a very few having a national, all India or national presence. So to that extent, it gives you a very good exposure based on the regions that you believe are doing well. Having said that, I would also say that we should also look to invest in the whole building materials chain, the derivatives of the real estate sector, including paints, including tiles, plywood, pipes, etc. So, I mean, depending on investor appetite, they could invest directly into the real estate companies, or many of these companies which would fall into, most of them would be in the mid market segment, which derive their core demand based on the real estate growth. And some of these, I mean, these companies obviously have very strong cash flows versus the real estate companies where you don't see cash flow. So, depending on investor appetite, you could possibly invest in the real estate companies directly or indirectly through the building material companies.
Okay, understood that. Fair point there. But Mr. Karwa, yeah, we've just seen the earnings season gone by. Was there anything that stood out for you in terms of a theme or a sectoral performance or particular stocks that you really felt that this is the time that, it is at the beginning of a multi-year high, or this theme is going to be, the next 5 years is going to be ruled by this theme, or particularly?
So I have a different way of looking at things. I thought that there are some of the segments which possibly are bottoming out
Okay.
and which have not done for the last few years, specifically the whole insurance pack, where valuations were reasonably attractive and possibly the worst possible regulatory environment, etc., was they went through in the last quarter. So I thought maybe that's one segment where whether it's life insurance, whether it's general insurance, whether insurance, there are quite a few opportunities to invest in that segment. So that was one opportunity that I thought one should be looking at. The other segment, which I thought possibly the numbers were very bad, was the whole agrochemical space. And my sense is that that segment also has gone through a lot of pain in terms of oversupply in the segment and a very high fluctuation in raw material input prices, etc. So valuations of that segment seems to be very attractive. So investors could possibly, who have a slightly longer term time frame, should look to invest in the agrochemical
Okay.
companies. And so is the case with maybe specialty chemical companies, which again many of them have gone through a kind of a consolidation to correction. Some of the companies' valuations have become attractive. So this, I mean, it's better to invest in companies or sectors which have gone through some pain in the last 2 years, including, I would say, some of the pharma companies. They have also had a tough 12 to 18 months, and possibly you can see some of the scram companies which should be showing a lot of uptick in their numbers in the next 12 to 18 months. So this was some of the 3, 4 contra bets you can say that we should be looking at. Obviously, financial banks, they deliver the best of numbers
Yeah.
and possibly are in the best of the greenest of health. And but as I said earlier, that maybe there is a sense of, I mean, there is a kind of over ownership as far as the large or the private banks are concerned. Opportunities could be there, but that would be more in the tier two banks or maybe some of the NBFCs, which are also doing very well. And if you believe that interest rates are going to stabilize to maybe correct in the next 12 to 12 months, then
Sure.
maybe some of the NBFCs could be delivering much better returns than the banks itself.
Okay. kept a note of all of this. Many thanks, Mr. Karwa, for being with us on the show and discussing all these wonderful insights for all our viewers. Great having you with us on Business Today TV, and here's hoping for many more interactions going forward.